traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for September 23rd, 2018. Before I get started on the charts and what we're looking at going into next week, I have to mention that we have our amazing new seasonal offer. It's been live for this last week, and it's going to be live up until the end of this next week. So basically October 1st, it is gone, and we only do this once a year. So if you were thinking about trying out ForexAnalytix, this is the time to do it. You get, here, I'll just tell you what the offer is. You buy 1 month, get 1 month free. You buy 4 and you get 6 months, or you pay for 8 and you get 12 months. That's our annual offer. It's a substantial savings. We only do it once a year, and then we remove it until, next year. So it's good until next week. And if you do use ForexAnalytix, make sure you download the mobile app. This way you have all of our analysis as it's being released right to your palm of your hand, even if you're not in front of the computer, in front of your trade station. And it's nice, when you're a parent or a grandparent, or you're just not in front of your computer all the time. You're out running around. You actually live in the real world sometimes, and you get away from your computer, away from your trade station, to know that analysis is being pushed, or that certain levels are being hit. It's important to have while you're on the go. So make sure you download our mobile app. I don't think there's any other company like ours that actually has a mobile app, so take advantage of it. Anyway, okay, let's talk about the key developments this. Well, actually, let's start where we left off on Friday. There were some pretty big developments in the FX market, and it's going to be interesting because the news that came out on Saturday that China cancels trade talks with the U.S. Amid escalation of tariff threats. That's a big news story. And so if you look at here, let's get rid of the cable. Actually, let's go over to the euro dollar. You look at where the euro ended. We're at a pretty big inflection point here. You'll notice that we stopped at the 38% retracement of basically the entire move here, the entire move down. We stopped at the 38% retracement, which was 117.80. Okay, now every technical note that I read from the banks is looking at the exact same thing that we've been looking at for this last couple weeks, is this big inverted head and shoulder pattern. So it's not like a new revelation. So the market's probably bullish while we are above 117, 116.50, somewhere in that neighborhood. This is, you have to say rough estimate around here. But if we drop back below 116.50, then the risk is, if you look out at the weekly charts, the risk is we have a big long-term head and shoulder pattern going the other direction. So if you're bullish the euro, I think you have to get a little worried if we get below the 117 and definitely below 116.50. Now, thinking about the news that happened over the weekend, and by the way, there's a lot of stuff happening this next week, especially with the FOMC meeting. We have the ECB president who's speaking on Monday morning. And actually Draghi is also speaking on Thursday. There's a lot of things happening this next week that could influence the market, but seeing where the dollar, the euro, how it responds within the first 24 hours of trading, especially with this escalation of the Chinese-US trade war, is going to be really interesting, because you might think, oh, the dollar is going to weaken because trade talks aren't going well between China and the US. But if there is some risk aversion and the yen strengthens, the dollar might strengthen as well. The dollar has actually responded pretty positively regarding the escalation of the trade war. We see the dollar actually respond better. So we might have the euro yen, for example, move lower. The euro dollar may move lower. So seeing how the dollar response is within the first 24 hours of the market open is going to be really important, because we are at such a key inflection point. I don't think you should, get too excited with euro dollar longs at this point. I think you have to really watch price action for the next, like I said, next 24 hours is going to be pretty important. Now, I also wanted to show you not just the euro dollar. I wanted to do my own drawing here on the cable. Excuse me. The pound actually stopped at the 38% retracement too. And by the way, if you haven't seen the massive, and let me just remove this fib level here. It's not even that important at this moment. This is a big, what we call dark cloud cover, really big reversal in the cable. And if you're long the pound, you're probably extremely nervous right now, and especially if we get back below roughly the 130 level. So I think, if you think about how many people are probably long the euro dollar and long the pound dollar, that's pretty worrisome, especially if the euro breaks through that 117, 116.50. If we see the pound break back through 130, I think you're going to have a lot of stops below those levels, which could trigger and really accelerate a reversal or dollar strength. That's something that you have to be concerned with. And it's not just the euro, it's not just the cable. I mean, look at the Aussie, for example. And remember, trade war escalating with China and the US, that is the one currency that's probably going to be negatively affected, at least initially, is going to be the Aussie. The Aussie is right up against channel resistance. Yeah, that's, look where we stopped. This is obviously a pretty big resistance zone, right? And it's a channel resistance. The Aussie is probably going to trade back down towards 72 cents, at least, at the beginning of this week. And take a look at the Kiwi. Kiwi, very similar situation, right? It's been in a really nasty downtrend. Actually, I'm going to take you over to this weekly chart. You can see broke below this trend line. We're just challenging the underside of this trend line. But the problem is that, we're going to open up probably a little bit negative the New Zealand dollar. And after this nice recovery from 65 cents, up to basically 67 cents, we're probably going to trade back down to 66 cents early on this week. So, because of this trade war escalation. One last currency pair I'll just show you really quick is the US dollar Canadian. The US dollar Canadian, we came right into channel support, and actually we tested and briefly broke below these lows here. And, with the risk that the US might leave Canada out of a new NAFTA deal, at least in the near term, and with risk aversion possibly picking up, and with the dollar looking like it's going to strengthen against the Aussie, the Kiwi, and maybe the euro, and maybe the pound, this US dollar Canadian could trade right up to 130 again, and quite possibly back up to 131, which would be just this channel resistance. Let me also mention one last thing about the dollar Canadian. I'm going to go to the longer term charts here. If you look at this this weekly chart, okay, and you go back to this multi-year trend line, all right, we're just testing the multi-year trend line again as we're trading towards this 129 level, and obviously there's channel support here, so the risk of moving back up towards this resistance towards 131, I think the risk is pretty high, and it's not going to disrupt the downtrend that we're currently seeing in this channel that we've been in since mid-July. I think expectations are high that eventually Canada and the U.S. and Mexico will have some sort of agreement. But when's that going to happen? Is it going to happen around the midterms? Going into November? Well, if that's the case, the US dollar Canadian could trade up a lot higher into the low 130s, maybe even to 132, 133 before something gets done. So being short the dollar Canadian, I guess what I'm trying to point out here is don't get too comfortable with it, especially with this, all the news that happened this weekend. Now you're probably thinking, okay, well, what about next week? I mean, do you really want to get long the dollar? With the euro, shorting the euro or shorting the cable below 130, or maybe selling the Aussie dollar. And do you really want to get too long the dollar going into the FOMC meeting on Wednesday? The Fed is expected to raise rates. That's one thing, but is it going to be a dovish hike? Will the Fed actually highlight the risks involved with, in our economy with the increase in tariffs and trade war. You know, it could be a dovish hike, and then being long the dollar might be a little risky going into Wednesday. But if you talk about when the market opens on Sunday, Monday, Tuesday, I think the dollar may recover a bit, and the risk might be that the dollar bounces against the euro and the pound, and then Wednesday is going to be a little trickier as we head into FOMC. Now, one last thing I do want to show you is I want to show you gold and silver, because these are going to be influenced a lot by the dollar. And I'm not going to show you the dollar index, because really, if you look at the euro, it's very opposite of that. And if you have ForexAnalytix, you can just read the analysis when you get an opportunity. But let's take a look at here's gold, and let's go over to the daily chart. Okay, gold is nudged right up against really key resistance here, and that resistance is 1213. 1213. That's going to be really key resistance. We've rejected it. We've really struggled there. And if you look at silver, once again, silver resistance is going to come in at 1530, I believe. Yeah, or 1430. Excuse me. 14.3035. But we're outside of this channel resistance. The silver looks like it could break higher. Gold looks like it could break higher as well. That poses a threat of continued dollar strength if silver and gold break higher, because we haven't seen the dollar and precious metals move higher together in a long time. But one of the things that we haven't seen in a long time either is risk aversion. So if you're taking a look at the equity markets, let me just take you over to the S&P really fast. If you're looking at the S&P and we have this ascending wedge, and we looks like we might actually come back down to 2,900 in the S&P. But what if, and let me just use a line here, what if the S&P actually starts breaking down? We break through 2,900 and we go to like 2,850. Would it be possible that we see dollar strength and precious metal strength together? Because if precious metals and the dollar go up at the same time, so silver, gold, the dollar, that's usually a pretty good sign to me that the market, when I say the market, talking about the broad market like the S&P, for example, is going to be under some downside pressure. So that means there's going to be some enhanced risk aversion if you see the dollar and precious metals going up at the same time. That's something to keep in mind. Usually I don't like to trade, if precious metals are breaking out to the upside, I'm not too keen on buying the dollar, but in a situation where there's more risk aversion in the markets, that's entirely possible. Okay, guys and gals, there's a few other things that are happening this weekend, or excuse me, this week. We have the RBNZ that is expected to meet on Thursday morning. So if you have any Kiwi exposure, just keep that in mind. We have durable goods orders on Thursday. We have Canadian GDP on Friday. There's other events that are happening, but the big one's going to be the FOMC on Wednesday. And remember, Draghi is speaking. President Draghi is speaking on Monday morning, early Monday morning, and he's testifying to Parliament, I believe. So that could be a market mover. So keep that in mind if you're thinking about taking some euro exposure, as soon as the market opens on Sunday, that you're going to be faced with that Monday morning. And guys and gals, if you found this video enjoyable and you think it's going to be beneficial to you, make sure you hit the thumbs up button on YouTube, and make sure you subscribe and share this video with your other trader friends, and subscribe to our channel, because this way when we release our videos just a couple hours after we film them every day during our free webinars, if you couldn't be there because you were working or you weren't up in time, you can go back and listen to the recording, especially if you're subscribed to our channel. You won't miss any of that analysis. So guys and gals, my name is Blake Morrow with ForexAnalytix. I hope you have had an enjoyable weekend. I hope you enjoy the rest of your weekend, and make sure you be careful at the open today, because we're probably going to see some volatility when the when you start seeing live FX rates around 3 or 4 o'clock, depending on your broker, 3 or 4 o'clock Eastern this afternoon. So have a great one. Thanks for listening in, and have a good day.